So you want some pointers on how to start investing? Great, because this is my complete beginner's investment tutorial. The best guide you'll ever need to get you started. Let's go. Hello everyone, welcome back to the Finance Kit. As always, my name is Dion and I'm here to push your financial mindset towards a better reality. In this video, I will give you a complete beginner's guide on how to start investing. And by the way, for those of you that are part of this community and you have already subscribed, welcome back and thank you very much. And if you haven't subscribed yet, well, what are you waiting for? Go ahead, hit that subscribe button right away. It is free and I will bring you personal finance tips and investing tips in the future. Smash that like button as well down below. Let's get straight to it. So if you've decided you want to start the path toward being an investor, congratulations. Maybe you have some money saved up or just had an unexpected windfall gains and don't know what to do with the funds. Or maybe you're already quite well off and you're just looking for the next great tip. Or maybe you haven't even started saving yet. This guide aims to be of help wherever you are in your journey and if you're a total beginner as well. So here are my ultimate steps towards building wealth regardless of the level you're starting from. First and foremost is you need to start with the end in mind. Your goal may be to own a downtown apartment or a holiday home. Or your goal may be as humble as paying off your student debt. Whatever it is, be realistic about what your goals are, short-term, medium, and long-term. Get those goals down and focus every action you take to be aligned with your goals. Next, you will have to pay off debt. I know, paying off debt is not as sexy as picking out stocks for your portfolio, but the reality is that debt costs are usually a lot higher than the interest you can earn with the same money if you were to invest them. This is because if it were the reverse, everyone would just take out a loan at 2%, put the money in a savings account and earn 4% a year. But the reality is that any loan will probably cost you more that you can earn with the same amount of money. At least from a bank, of course. Yes, if you take out a business loan and use that money to create a business or fund operations of a business, the returns could be worth it. But most of the debt people hold is a credit card charge for an object that they might not even use anymore, or student debt, which unattended can rise exponentially over time. So pay debt first before you commit money into anything else. Along with paying your debt, you will need to build an emergency fund. Depending on where you live and your lifestyle, there are a few different options for the type of emergency fund you want to build. This will basically be cash which is available to you to withdraw in case of need. The focus word here is need, not want. Those are money for emergencies, not to be spent on the next shiny gadget that comes out, okay? So for example, an emergency fund of around $1,000 is a good amount to have ready for small things like unexpected medical bills, fines, accidents, etc. This is good for people who already have some money stashed away and therefore can do with a smaller emergency fund. $5,000, for example, a traditionally recommended amount for a person in normal employment situation with a moderate amount of savings. That is, if you happen to lose your job and you need to live off your savings for a couple of months while you find something else, then this $5,000 could really come in handy. And finally, 6 to 12 months of expenses is something I would recommend for you to aim eventually in hitting that size of an emergency fund. This is a lot more appropriate for people who already have a family and who work jobs which are not very stable, or in a city, country where there is a lot of uncertainty. Certainly during this pandemic, for example, this amount of an emergency fund will make your life so much easier, trust me. One less thing to worry about if things go south. Now hit that like button down below, share the video on social media if you feel like some of your friends and family need to see this. And as you're paying off debt and building your emergency fund, you need to search for a high interest savings account. And by high interest, I mean something more than what your local bank and credit union can offer. Usually you get that with online bank accounts, and any extra annual percentage point will help if you're keeping money in the bank, which will not make you rich, by the way. But let's face it, most of the savings account pays close to nothing. Every now and then, however, you can find some offers out there for high interest savings accounts which pay more than the usual. Sometimes there will be a monthly cap to your contribution as well, but having a high interest savings account is recommended. Once you have your goal set, debt paid, emergency fund situated, you can start contributing small amounts to a long-term investment portfolio. Did you know what Warren Buffett said to his heirs? My advice to the trustee couldn't be more simple. Put 10% of the cash in a short-term government bonds and 90% in a very low-cost S&P 500 index fund. Smart advice, don't you think? And that is because through diversification, there is a lower downside risk and a higher chance of long-term good performance from a broad spectrum of stocks rather than individual stocks. The most common providers to find low-cost index funds would be either Vanguard or Fidelity. I mean, there are many others, but it is best for you to research and see what works for you. Next step as you grow as an investor will be to pick out individual stocks. If you have reached that far and you feel confident, well, you're now ready to start picking individual stocks. Investing in individual companies can be more profitable than a broad portfolio in the short term, but it is a lot riskier. Imagine if the company you bought shares in becomes suddenly affected by unexpected problems. They can cause some major losses compared to a broader investment like an index fund, for example. And you would probably know that if you have bought massive amounts of shares of Boeing and Carnival in December of 2019. And we're at the point where you're ready to diversify even more as you're building your wealth. So consider alternative investment avenues, whether it's cryptocurrencies, peer-to-peer lending platforms, an angel investing opportunity, or crowdsourcing sites. There are plenty of alternative investment opportunities for those who are willing to take the risk and also know the market to a certain degree. These investing avenues tend to be a bit more riskier than more traditional ways of investing, but as part of a diverse portfolio could provide a bit of diversification that everybody needs. Additionally, it is always a lot of fun doing research on some more non-traditional investment opportunities. Now, let's not forget that you need to diversify with defensive and ultra defensive assets. What do I mean? I won't spend too much time on this advice as it's a bit overdone, but it's worth mentioning. This advice comes into play when you're working towards preserving wealth rather than building wealth. Owning precious metals in your portfolio, such as gold, could guard you in times when inflation is high and the currency becomes devalued. Look at the prices of gold and silver during this pandemic. Also, if most of your money is held up in stocks, you may want to diversify with a range of bonds, as these markets can usually work in reverse correlation. When stocks are high, bonds are flat, and when there is a stock market crash, bonds go higher typically. Lastly, you should be ready to start buying some real estate property. For some people, that is all they do as investments, because real estate can be one of the most powerful wealth building tools at your disposal. However, I left this last because there are multiple schools of thought out there, and after all, this is not a real estate investing guide. The two main strategies which are in conflict are own your home, that way you won't need to spend money on rent and you have the security of being a homeowner. Or number two, rent your home if you need to, but buy investment properties. While buying your first house, for example, it seems like a major milestone in life, sometimes the numbers don't pan out. So what people would do is they would rent, which makes more sense, and at the same time they would buy an investment property which will generate money. Or you can combine the two and do what is called house hacking. Buy a large house, rent out a room or a part of your house. More often than not, the rent you receive may cover the mortgage for the entire place. But overall, real estate is a great way to build wealth, and I will have more videos on that, so make sure to subscribe. In conclusion, there are multiple steps you need to take to become financially secure, but broken down into small, actionable steps, building wealth can be an unforgettable journey. So get cracking, because the longer you spend in the markets, the more wealth you will build. Time is your best friend when it comes to investing. And with all that said, thank you for watching. Make sure to destroy that like button. Subscribe if you haven't already. Not sure what you're waiting for. I will continue to bring you valuable content you don't want to miss, working around the clock for you and sharing my experience as soon as physically possible. Thank you if you have subscribed already. If not, again, hit that subscribe button. I hope this video was informative and provided some value to you. Down in the description, you will see other helpful links you don't want to miss. Thank you for pushing your financial mindset towards a better reality. Until next time, stay positive, master your finances, and take a good care of yourself and those around you.